Music Production.
Yo, what is poppin'? So it's getting a little late tonight. I'm getting a little bit tired, but we're gonna bust out a few stock technical analysis breakdowns here. We're gonna start off with Argonaut Gold. I like this one here. Shout out to Nick, man. That's my guy. This guy's been dialed in and really focused on like improving his trading, and I've seen the results from this guy. Like, it's nuts. So I'm gassed up for him. He brought this up in the Train Your Brain to Be a Money Printer Discord. So I've been running that for over a year now, and I'm doing it for another 6 months. If you want to join, DM me. So I'm going to post my IG accounts down low. DM me on either one and we'll get that figured out. But essentially, it's a community where we share a bunch of different trade ideas, and I try to help explain and teach market psychology, technical analysis, and different skills to like pretty much, trade markets and how to like mentally prepare and be good at it. So here's Argonaut Gold, right? I like this name, and the reason why I like this name is because over the past, I'd say since 2020, right, we've seen everything rocket in 2020, but gold and precious metals have been pretty stagnant, right? So with all this recession fear, right? So the inflation fear is going to turn into recession fear, and usually when you look at precious metals, they tend to perform slightly better during these recessions because people want to put their money in safer assets, right? So it's interesting to see like gold miners and all these other low-key gold companies, are they going to get a pump going into this year, 2023? So let's get into it here, right? So we have this massive drawdown. We're on the weekly time frame on Argonaut Gold. This is a Canadian stock. Right, so just to make the basic downtrend, right, 1, 2, 3, we have this massive move downward. So 1, 2, 3, and now look how long it's taken us here where we've been sideways in this range. We've been sideways in this range since July 2022. Okay, so in the next little while we want to see, are we about to curl up? Now something that's important that I want to draw out right off the hop is if we scroll all the way back, right, this goes to 2016, right? So we scroll back to 2016 and we have this support zone, major support, right? And it comes right across to here. We broke right through it in 2022. Back in June, we went straight through it. So when I look at this stock, I immediately think, okay, we've been basing for a while. There's also a small resistance here if you look and we zoom in a little bit. There's been a resistance at this level, and we've double topped right at that like 64 cents, right? And that's where we're headed right now. So if we mark out this area, 63, 64 cents, whatever, this is our minor resistance zone, and that dates back like a few months back, right? So we could look at that as a monthly resistance. We need to beat that level before we can then go further up above. So it's important to have this out. So what I'm going to do here is I'm going to mark this zone as our major resistance. Why I'm marking this major resistance is because look how much time goes back, right? Previous support will turn into resistance eventually if we break below it, which we have. So we've come to this level once, 2 major times in the past like 6-7 years. So now what I'm expecting is, if this is this base here, and reasons why, I'll get into reasons why I think it is potentially a bottom, but what I'm trying to say is that's the major resistance, because look how much longer period of time that like we're gonna have to prove, right, that is our, if it's not support, we're gonna shoot right through. I don't think that's gonna happen because 2 major times we have used that as support. It's about time now that we're below it, it'll act as the opposite. Okay, so why I think we could be heading up into that zone, and this could be a reversal of this major bear market in precious metals. We're going to zoom in here. This is the weekly time frame, and again I have the RSI. This is the relative strength index, and we have a bullish divergence here where the price is telling us that it's decreasing, right? We're making our lows on the price are decreasing. We've made a low and then a lower low over here. If you look at the RSI, we have the opposite where the RSI is telling us there's higher lows. That is a divergence in the RSI and price action. That could be telling us that there's the demand has switched up, right? Instead of it being less demand and more people selling, there over this period of time there could have been more people buying than selling, and that is kind of proven because we're starting to see this little base form and the curl up to this next level. So what do we need to look for? Okay, like we can't just right off the hop get all hot and horny about this. What we need to look for is this zone. We don't want to see it act as resistance where we make our ways up to this level and then we just get a bearish engulfing or we get shot down within a few weeks. Because then what we'd be looking for is another potential touch of this trend line, or some sort of touch at this level, right? So that would also mark us as another higher low and potentially, right, a start of an uptrend again, where we might take more time to break this $63 zone. So I think longer term, it is a great trade idea. But if we're expecting this to just rocket up, it might take a little bit more time. And if it does happen, right, say we do get this move, we get the move where we push all the way up here. Wow. If we get something like this, we're going to expect this area to act as resistance. And when it does inevitably act as resistance, what we need to look for is, right, this needs to then act as support. That would be telling us that the demand is for sure switching up in the stock, right? More demand than people selling, more demand than supply means price will slowly go higher. So another thing that I kind of like about this is if we pull up the 8 EMA on the weekly, right? We've been under the 8 EMA on the weekly for a significant period of time. Can't really hold that range, right? We're now at the point where we're above the 8 EMA and we've been there for 1, 2, 3, 4, 5 weeks. We want to see that continue. We need to hold that 8 EMA, right? So we're going to go into further detail because another characteristic that I'm kind of looking for is the 21 EMA crossing above the 50. Now let's zoom in here, right? This is the daily time frame. When you see a bearish cross, the 21 going under the 50, right? That is indicating price action will drop, right? So every time we look that there's a bullish cross where the 21 goes over, price action tends to rise and you want to see price hold the 21 EMA. Opposite, you see it cross to the downside where the 21 goes under the 50, price will then reject the 21 and that is proven that it is a downtrend, right? So what we're looking for here on the daily, we see the bullish cross, right here. That is a good sign. Does it mean the numbers for sure going to go up? I mean, no, we must be open-minded to the other side here, right? That it could get stalled up in this range. We could be going sideways for a lot longer. But if you're looking to gather positions and hold this for a longer term positional trade, what we would then be looking for is slowly we go to the 20 or the 2-day, sorry. Now the 2-day, we're slowly starting to see that 21 starting to point up to the upside. The 21 and the 50, right? You see this gap in between. We're starting to converge and get closer and closer together on the 2-day, right? So the next step, we want to see that 21. Can you do something for me? We want to see that slowly cross over the 50 on the 2-day. And then if that holds, you look at the 3-day, right? So even on the 3-day here, we're starting to get closer. And then you could just look back at charts and then test this to see if it's a strategy that you want to use. But oftentimes the bottom will come in before the cross. So if this is an opportunity that you're looking for, I'd be paying attention now, getting it at a price of 58 cents. A few other things I want to point out, right? We have a massive gap up here. That's kind of important. If this gap wants to get filled over time, right? As we slowly break these resistances, if it happens, we can then look, right? So say you miss this trade. You're like, damn it, I missed it. It isn't going as high, or I didn't catch that bottom trade. Well, that's okay, because if it's still showing uptrending characteristics, these are the levels we want to look at for another potential trade, right? So there's multiple trades in here. The ones who catch the bottom are obviously going to get the largest amount of return, no doubt. But that doesn't mean that if price continues to rise and you want to get in at $1, doesn't mean that there's no room for you to make gains. You still have potential to do that. There's another gap up here, right? All-time high on this stock, right? If we're looking at this from like a monthly perspective, right? Even from a monthly perspective, it's starting to look cute, where we're starting to get that potential bottom, right? Where we have the selling prices trying to go lower. Look at that monthly candlestick, greatest of all time. The most amount of buying has happened since this stock has been printed. So again, when you look at, if you say we zoom over here, look at the bottom here, there's quite a large spike in volume for 2 months. Right, where else? Anytime we look at a bottom, there's a few decent spikes here. 1, 2, 3 large spikes in volume coming in, and that led to price going up higher. So this is significant. We want to pay attention to that, and we need to see that continue in the next coming weeks, months, leading into this recession that we're all expecting to happen. So that's the breakdown on Argonaut Gold. It is a little bit longer, but I hope it's jam-packed, filled with technical analysis information and a few different like psychological tips and tricks to like get a grasp over the market. Peace, guys.